Today on Trading Nation, pleased to be joined by Vertical Group analyst Dick Bove. Dick, let's look forward to bank earnings because just a couple of days and weeks now, we're going to get all the big banks and Wall Street banks out with their numbers. But there's been a lot of talk about trading being weak due to lack of volatility and a kind of a continually weak bond market. What kind of numbers do you think we'll see for the fourth quarter?
Well, I think the numbers are going to be mediocre at best. I think that you've got three problems facing the banking industry for the fourth quarter. First one is, you clearly mentioned, Brian, trading is going to be lousy. The second one is that loan volume is weak. And the third one is that these banks did not really benefit tremendously from the increase in the federal funds rate. So the net of it is most of the earnings improvements will occur will be in keeping costs down, keeping loan losses down, and therefore you'll get a slight improvement in earnings, but nothing exciting, nothing interesting. Go
ahead.
Yeah, the real interest is really these banks are sitting with a massive amount of underutilized earning capacity. In other words, they've got $2 trillion in equity, which can be put to work. They have in excess of deposits, is what I'll call it, of $3.7 trillion, which is sitting in liquid form. And if the economy were to rise, with any degree, that 4% or what have you number, that liquidity would be put to work and bank earnings would go up very sharply in 2018.
So we buy stocks not for what has happened, Dick, but what will happen. I mean, we want to look out and discount, as they say, future events. So fourth quarter will be coming out, but if we're bullish, how about this? Is there a reason to be more bullish on some of the big banks, given a pickup in trading volume in Q1, Q2, et cetera?
Yeah, no, I don't care about trading volume, to be honest with you. I think investment banking is going to be explosive in 2018. And the reason why it's going to be explosive is because, as Jim Cramer has mentioned, there's a lack of shares in the marketplace. And when you have a lack of a product and the price of that product is soaring, the natural inclination is to bring more of that product to market. So I think we're going to see a bunch of IPOs, a lot of secondaries. We're going to see some of these unicorns, decacorns, or whatever they want to call them, coming to market. And I think that means that investment banking profits are going to soar. In addition to which, if we put the economy to work, we've got $3.7 trillion, to repeat, we've got $3.7 trillion in the banking system to fund it, and therefore earnings could be really exciting. So who cares what happens in the fourth quarter? It's ancient history, even though it's not going to be mentioned for another couple of days. What we care about is if we get this investment banking thing going, if we get these loans happening, banks will make a lot of money in 2018.
Who is best positioned? Who'll make the most money, Dick?
Goldman Sachs. In other words, Goldman Sachs is a company that we had a sell on for most of 2017, but we switched to a buy. It was a sell because it was limited to two businesses, basically investment banking and trading. It's a buy because it's limited to two businesses, investment banking and trading. And the difference, of course, is that whereas those two businesses did nothing for the last couple of years, we think they're going to be very exciting in the next few years.
Dick Bove, always a pleasure to have you on Trading Nation, looking out and looking at particular Goldman Sachs. Dick, always a pleasure. Thank you so much.
Thank you, Brian.
Folks, and be sure to check out the live version on CNBC's Power Lunch. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.